Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 25th of January, 2023, time 6:10 p.m. Central Time. Well, it's an earnings day. You know, there was really not much news on anything else. One piece I thought was important, though, was the Bank of Canada's monetary policy, and what the bank did is they went up 25 basis points to 4.5% on their key rate, but then they announced they're in a pause. Now, they have led what our U.S. Fed has been doing for a good part of first the rate break, now the rate hikes. Okay, I've been watching them. They've been ahead of the curve, not behind it, not like the European Central Bank in any manner. So does that mean that we get another rate hike next Wednesday, a week from today, by our FOMC, and that's the end of it? Some will start saying that. Just be ready for it. It put pressure on the dollar when they did that and gave a bid to a number of other currencies because of that. Gold was a big performer. Now, you know, tomorrow we're going to have the live webinar. Instead of people getting properly into gold, I'm inundated with questions on silver. I don't know why people aren't buying, and I'll never get it, okay? People want to buy the market that hasn't yet done it. They're trying to catch the pop. Is it because they missed the freight train? There's been a long time to get involved in gold. We've been talking here about it getting back to the old high of 1985. You're now $20 away from it, basis the April contract. So very interesting as to what's going on in that. But why don't we take a look and see what we have? When you look at the S&P, you continue to stay over the 18-week average of closes on a close-only chart. Let me bring that back. It's an area chart of only closes. That's weekly as well. Now on a daily bar chart, you can see how the markets come up. It's still fighting the battle right where I've said it should be each day. The trend is up. You have higher lows, higher highs. Can't fight that. The market is over the 18-day average of closes. The battleground, to me, is crystal clear. It is the 200-day moving average in gray combined with the upper Bollinger Band. So you got there, you hit it, you back off, you come up into that zone. Don't know which way it wants to pop here, but regardless, what's going to happen is risk on and risk off is going to be the theme each day as you get into that FOMC meeting time. And once it's done, then we're going to move on to other things. But I think you'd agree, these markets don't act like markets. They're falling out of bed. I read, as you probably do, be it Reuters, Bloomberg, CNBC, Fox, I read them all. And analysts are trying to figure out the recession. We think we're in it already in housing. We think we're in it in industrial. What's the next shoe to drop? Yet these markets don't act that bad. They're acting bullish, not bearish. To break the pattern, you've got to take out these lows and close under the 18-day average. Certainly that low is going to be important, and closing under 39.01. Until that occurs, you're still in a market that's trying to add to the upside, and it's got support at 39.55 and resistance anywhere from 39.97, which is the 200-day average, to the upper Bollinger Band at 40.38, and the bias is up, and momentum. Did we embed? Let's look. You can't count tonight. Remember that. So we go back. I can't do it. It's not letting me do that. Darn it. But you need 3 days in a row. I don't think you quite have it. I'm sorry. I touched something and it's just not going to let me do that. You have it in the NASDAQ. So the NASDAQ is the powerhouse. So the NASDAQ, and I think you did it in the Russell. I think those are the markets, and I teach it in my enhanced Bollinger Band course, how to come into them until the red line closes back under 79. Target, if it continues up, the combination of 12,163 to 12,130, the upper Bollinger Band 200-day average. That's logical to me. And you get a failure on a move back under 11,430. In the Dow, you're not even trying to embed here. You have a market that has the swing line down. With tonight's action just now, you have higher lows, lower highs. So try to imagine you're forming a wedge like that. You're coming in. And we're doing it with those lower highs and the higher lows as you're coming up. You're going to force it into the tip, and it has to make a decision what to do as it gets forced in there. And where's it going to decide? Probably right in front of the FOMC meeting. In the Russell, I believe you have your embedded reading, and I think the traders will start buying this market. I think that the big question for many is, do you even go through the FOMC meeting? Do you want to hear what they say afterwards? That the press conference will be as important, obviously, as the announcement itself. And that's going to be leading me, what is everybody thinking, okay? And that the Fed president the chair actually, will give the idea. You know, it's interesting too, Leo Brainerd may not stay on as the vice chair. It appears that the Biden administration would like to take her. I thought these were separate forces. I'm very surprised at that. And who would they bring in as the number two, and how fast? You know, it took forever to get her on board. So I don't know how that would all work. But in this, until the market loses the red line under 79, the bias is up and you're still targeting higher prices. In the VIX, the cash VIX, the market keeps fighting the 18-day average, trying to come down right here. In the T-bond market, higher lows, higher highs, bullish. Overbought? Well, you need readings that are not 70s to be overbought. You're overbought. In the 10-year market, corrected. I am still looking to see, can we get to the 18-day average? Typically, when you have an embedded reading, if you had it here, and you lose it, you go back to the 18-day average before you take out the most recent high in the market. Dollar index, well, if the Fed, even the word pause gets in, that's bearish the dollar, not bullish. And it's because other currencies, major currencies, be it the Bank of England, European Central Bank, they're going to raise rates. They're not coming down. I can't begin to tell you when they think they will go into a pause, but most analysts think that there's at least 1.5 points coming out of the European Central Bank before it does it, and that puts pressure on this market. In the euro, it put pressure to the upside. It's embedded, the flip-flop to the upper Bollinger Band. The British pound is embedded. We expect that they're going to raise rates again. How long and how high is still up for debate, but they're in the path of going to the upside. In Bitcoin, now the February Bitcoin is the time to move. Today was the pullback day, and we'll see if that ended up being the buy. You have an embedded reading. I was telling clients today that they could step into it in my morning subscriber video. I'm certainly not going to tell you here where I told them to do that. In the Brent versus WTI, we were wondering if we were spiking up there, and we are. Now, is this market going to crisscross under 5, and that'll bring the two back in line with each other? And as you can see, with China closed, and they are closed for the lunar holiday, hard to keep this market up. You need some new bullish stories that you're not just getting at this point in time. The good news is we are not seeing that more oil is coming out of our strategic reserves, according to today's EIA report. And I don't want that to. It's time for the Biden administration, and they said they would, to stop and replenish what we have taken out. My dilemma is, when I look at this, at what number are they going to replenish it? I'm praying they're not thinking they're getting down here, as they said in there. I think that they might have to go a little higher. If we keep talking the recessionary word, and this is all oil's doing, what do you do when the markets feel that the recession, we can see at the end of it, the tunnel? This thing will explode on you. You got to be careful about this. In the heating oil market, as the market's pulling back, I'm looking for support 315 to the 314 area. You're too overbought in this market. Overbought either embeds or corrects. Right now, it's acting like it wants to correct. And we're nowhere through yet on the March natural gas. It's still looking to me lower, but I'm not thinking it's going to go much under the 270 area. I keep looking for when Freeport's going to come online. If we get a piece of bullish news, that can jump it. But until it does, the embedded trade is at work here. Now, we had some trades that did come in just this week with outside days, and they went right to how I teach. When they lost them, and they lost them, one of them lost it right away, went right to exactly the number that I teach in the course. My traders, in fact, I had people writing me today asking me about it. One of my traders wanted me to go through a bunch of trades for him, which I did. I created a video, went through it, and then I explained to him as best I could the other parts of it, and boom. He's learning. And that's the whole thing. I want you to learn. Anybody can say, oh, come on, we're going to buy here, we're going to sell there. Isn't that all they do on CNBC all day long? So which one of the hosts do you want to see? Oh, he's bullish, he's bearish. But why? And why can't you make that decision? Put in the effort. It's not hard, okay? You put in the effort, you learn a few tools, and you keep adding. You're not going to make your life one where every day you're going to add something. If you do, you're going to get confused. You take a couple of courses, you stop, you master what you've learned, and then you move on. To help you with this, I make sure that you have access to my research while you're taking the course. For a couple of weeks, you're going to get my complete futures and/or my ETFs with it. If you're a qualifier, I don't want somebody that just took my service, cancels it, buys a course and says, give me your stuff for free. That isn't going to happen. All right. I'm very fair, but I won't be taken advantage of. So I said for qualifying users, I set the qualification. You will get the charting software so that you can follow what I do. To me, that is crucial. It is no good for me to teach and you can't do it yourself. I need you to be able to do this. So how do you find out? Well, you can always call my staff and talk to them. Number two, you can go to our website under the word education, or you can move up here. There'll be an icon that appears. Give it a click. It'll take you right to the area you have to go to learn about this, okay? It's very simple, very inexpensive. It's going to sit with you. It's going to sit with you a long time. You may not like it. You may love it. I love it. Last, I'm going to see you tomorrow, I hope. 12:15, I will open up the webinar, and we'll start promptly, 12:30 p.m. Central Time. Have a great evening.